Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Sorry for the delay. We were having some technical issues getting going today. Really another big week for us on a dreary day here in Kentucky. Let's kick things off, though, before we get into some of those big reports and recap what happened this week in the markets.
Yeah, on the cattle side this week, cash cattle were nearly 50 cents higher on the week. Those feeder cattle markets also tended to show strength, up $5 to $10 higher on the week. On the futures side, we saw April live cattle futures contract close down 55 cents on the week, and the March feeder cattle futures contract was actually up 50 cents on the week, despite what was March corn futures that climbed 28 and a quarter on the week. On the beef side, the choice box beef price fell $7.70 this week. You know, we really lost out across the board in those components in that box beef price. On the pork side, cash barrel and gilt prices were nearly $3.60 higher this week. We also saw the April lean hog futures contract gain this week, up $1.45. As did we see higher pork cutout value. It was up $7.40 this week on what was very strong ham and belly prices on.
That is no joke about strong and ham and belly prices this weekend. We're actually going to talk about some of those prices on the retail side of things coming up in a little bit. Let's take a look at slaughter numbers. We saw a little bit of a setback last week, largely due in part to weather-related issues, but we seem to have bounced back a little bit this week.
Yeah, that's right. For the week ending February 12th, USDA says we're going to slaughter 659,000 head of cattle. That's 20,000 head above where we were a week ago and 53,000 above where we were a year ago. On the hog side, a run of 2.516 million head this week, 71,000 head more than we slaughtered last week, but yet down 127,000 head from where we were a year ago.
The big report this week, supply and demand numbers from the USDA, and interesting on the grain side of things as well, which we are not going to get into today, but an interesting adjustment on the red meat and poultry side of things.
Yeah, that's right. You look at the export side and continued downward adjustments and in terms of exports in this report. USDA is now calling for exports in 2022 to be below 2021 by roughly a little more than 2%. That would be the first decline since 2015. So maybe some more bearish news on the trade side. Yet when you look at per capita consumption, we're going to be talking about per cap consumption down slightly from where we were a year ago. So maybe domestic demand holds with us. In terms of prices, the biggest adjustment I think we see happening on the pork side, so barrel and gilt prices that were increased nearly $5 this week, $4.50 higher. Yet across the board, all of the livestock prices were increased in the February USDA report relative to January. And so more strength, more positive news on that front. Now, to the crop side, I'll just remind us what was a $35 per ton increase in soybean meal prices that happened from January to February means feed costs keep getting pushed a little higher, even though USDA didn't make any changes in their season average price for corn.
I think it also probably deserves a mention of risk management as we take a look at the potential for higher pork prices in 2022, but also rising input costs as well. Yeah,
so we've seen a little bit of softening on the future side late in the week, but we started really strong, especially on the pork side. To me, there's opportunities to lay some risk off. I don't know exactly when the right time is for everybody to do that, but let's not look up a few weeks or months down the road and go, oh, I sure wish I would have taken advantage of some of those stronger prices. So there are opportunities, and so for cattle, for example, I'll talk about the LRP product being offered by crop insurance agents as a relatively attractive way to lay risk off, yet be able to take advantage of higher prices if they occur through the year. I just encourage folks to take a look at what's there. And if you've never spent time with a crop insurance agent to ask them about LRP, right now might not be a bad time to do that. Last thing I want is to come this fall and all of a sudden talk about much lower feeder cattle prices than we anticipated, and a bunch of cow-calf producers not having that risk locked in.
Monthly trade data, really final report from 2021. December seemed to back off a little bit on both beef and pork side of things, but that doesn't take away from the record-setting year in terms of value for both beef and pork, and beef for volume as well.
Yeah. So when you look at what happened in the December numbers that we got from USDA this week, so beef exports were still up 2% relative to the previous year. They did slow in December. We're actually down about 10 million pounds from November to December in terms of overall beef exports. That had a lot to do with places like Japan and Korea being down a little bit. On the pork side, so I go really a continuation of the story that you and I have talked about for a while of weaker beef exports. We're talking, pork exports. Let me say the right thing now. We are talking about it being down roughly 20%, which is all due to China. And so China has mattered a lot. Yet, when you look at the value on an annual basis for both beef and pork, we were higher in 2021. We saw the muscle meats of pork at a value of $6.87 billion, up from 6.67 in 2020. So we grew in value even though we were down in volume. The beef side is the one that just is stellar, with muscle exports of beef reaching almost $9.5 billion. We were only at $6.75 billion in 2020. So it sticks out as a nice recovery on the beef side. And again, I think we can thank China for some of that gain we're seeing in the value side of beef.
So I think it's interesting. We talk about the value of the muscle cuts as well, but you can't discount the value of the variety meats, because on the beef side, over $1 billion alone in variety meat exports. How important is that to the big picture of the value that comes back to producers when we look at these export markets and these trade agreements?
Yeah, so making it's big, and I say that because the alternatives of keeping those variety meats here in the U.S. Would mean a lot less value. Typically, is things that we don't value like some other countries would. So those offal products that we're moving to other parts of the world certainly add to the bottom line of prices we ultimately pay for things like cattle and hogs. So it is a nice add, and we don't want to overlook the importance of that, because again, we saw strong demand for those other products beyond muscle cuts of beef and pork leaving the United States.
I mean, I love liver and onions, and I love tripe in my pho, but I don't think I can consume enough to make up for what we're exporting around the globe.
And the last thing we want is to have to pay the cost of rendering those products instead of getting value from them. So it's maybe not even a net zero at times if we aren't careful about marketing those to other parts of the world that see the value.
I think that's one of the coolest things that the U.S. Meat Export Federation does, and the checkoff programs do, and investing in expanding markets and market dynamics, and really how much it brings back to producers in terms of value.
Yeah, so I will keep saying we have a lot more growth in population outside the United States, and that growth in population outside the United States is seeing income growing faster in their pockets. The growth going forward for us in terms of meat demand comes from outside the United States as much as within it. And we don't want to forget that as we look ahead for where do these industries go.
We do highs and lows with our kids at the end of the week. What's your favorite part of the week? What's your worst part of the week? That's probably the high for the week this week. And we're going to go right into what I would probably call our two lows of the week, and end on a not so positive note. Let's start first. Take a look at retail prices, Scott, because inflation really is coming into play here.
Yeah, so we certainly continue to see the general economy focused on inflation. Highest inflation that we've seen since 1982 were the headlines this week. 7.5% overall more inflation out there. A lot of different ideas about what's happening that's causing that inflation, from government stimulus to supply bottlenecks. And I sometimes say it's all the above, and we can argue about the relative importance of each of those parts. But the bottom line is we've got a lot of inflation. We've been seeing this in meat prices, and it hasn't, really changed in terms of what we see happening right now. We see beef retail prices that continue to move higher. Pork retail price was up 14% in January, poultry up 9.8%. And so we're seeing that across the board. Beef was up 16%. So despite that, we've seen strong demand, but we're certainly pushing higher and higher prices at consumers. And of course, the concern is at some point they have less money in their pocket to be buying those beef, pork, and chicken products.
Scott, as we round out today, consumer sentiment also not a bright spot in this week's conversation.
Yeah, in fact, worse than a level in a decade. We're 8.2% below where we were a month ago for the February data that we have out. It seems like inflation has really, caught the attention of everyone. So when you look at the current index, the current economic conditions index, that portion of the overall consumer sentiment, it was down 4.9, expectations down 10.5. I think we're going to continue to be keying on inflation as we look ahead at this report in the next few months.
We talk about inflation going up. How much are we also watching wage rates as well? I mean, is that helping to keep demand supported in a big picture of, if we're taking a big picture view of this, maybe dulling some of that pain of higher inflation, higher prices at the grocery store?
So I think it does help, so this becomes one of chasing, right? So yes, wage rates have been rising, but also the cost of things that we're purchasing has been going up as well. So it's the balance. It's not just straight in inflation in those food prices, for example, that matter. It's the relative of what I'm being paid relative to what I'm having to pay out. We'll see how that moves. I will say, interestingly enough, when you look at this consumer sentiment, a lot of the lower index was driven by high income consumers, not low income consumers. So we'll wait and see how that plays out in terms of food demand. It might be a little less negative than it looks at face value.
No big reports next week. However, we do have a big topic of discussion. Next Friday is February 18th. And for those that may not know, that is when the current expiration of mandatory livestock reporting or livestock mandatory reporting expires. So that will drive the bulk of our conversation next week as we're able to see where things shape up during the congressional week and see where we're sitting, hopefully in a good position on Friday afternoon.
Yeah, let's hope that we can talk about being able to continue to report prices into the following week, and we aren't in a situation where LMR is somehow temporarily not allowed or doesn't proceed going further. So we'll see what happens on the 18th, Megan.
Good to see you as always. We will talk to you next Friday.
Sounds good, Megan.
So we have our weekly livestock market update delivered to your email box every Saturday morning or Saturday afternoon if Scott and I are running a day behind. Go to brownfieldagnews.com. You can also submit questions and comments there as well. And for all the great podcast material that Brownfield has, go to brownfieldagnews.com/podcast. Have a great weekend. We'll talk to you next Friday. I'm Megan Grebner for Brownfield.